Hi there. Before I start today's video, today was a significant day for me because it was the first time I was recognized in public. I was taking the dogs for a walk. This was in Mitchelton in Brisbane, and I was going through an intersection, and a guy who was waiting at the lights rolled down his window and yelled out something to me in regards to my YouTube channel. And this is, yeah, a significant moment for me. So shout out to whoever that was who rolled out their window and acknowledged me. You will always be remembered as the first person who has recognized me in public. Hi there, welcome to Kneppy Invest. Every single weekend, I do like to go through many charts, a plethora of charts. And my investing strategies have evolved over the past 5 years. If you go back 10 years ago, I would only look at those companies that I thought were going to be bigger in 5 to 10 years. I did not care about the charts. However, I found that technical analysis can be beneficial to my investing strategies. So my strategies have evolved. The other reason they're evolved is because technical analysis really suits my personality. In fact, it suits my personality a little bit more than the fundamental analysis you will find people trying to tell you is the only way to invest. The only way to invest, they say, is to find good quality companies for the long term. That's not absolutely true. I think you can find really good opportunities in the short to medium term looking at technical analysis. And I have done this over the past few years, and I have been successful. And if I'm successful, everyone can be successful using technical analysis in the short to medium term. Now, I'm not talking about day trading. I would never get involved in day trading. In fact, the majority of day traders more than likely do fail. So I'm talking about month to a few years, that sort of time frame. And I have been successful finding companies in that time frame, for example, South 32, Oz Forex Groups, two companies I probably would not invest for the long term, but I definitely would invest in the short to medium term. So I am looking at charts every single day. Maybe not every single day, but definitely every single week. I'll look at a plethora of charts. And I'm finding really interesting situations out there even right now. So when the overall market is down, there are still really interesting opportunities out there. In today's video, I'm going to focus on Lake Resources, which is the best performing company in the group portfolio. So not only will I take a look at what's happening with Lake Resources, but also go back in the past to see if what's been happening with Lake Resources over the past month is something we usually see in the trading of this company. Also take a look at 4 other companies, or maybe it's five other companies. I think it's 4. 4 other companies that either I am finding interesting right now or I have found interesting in the past. Those 4 other companies I'll be looking at in today's video are Berkshire Hathaway, one of the best companies in the world, Aussie Broadband, which is the only company in this list that I actually do own personally. And I'm kicking myself for not buying Berkshire Hathaway about 2 years ago when the share price looked really good. Ramsey Health, this is a company I owned in the past, and we'll take a look at the weekly chart for that company because the share price has done absolutely nothing over the past 6 years. It's gone sideways. So sometimes you don't have to own a company forever. You can sell out of that position because there is an opportunity cost to holding a company where the share price just goes sideways forever. Maybe 6 years is not forever, but it might seem like forever. And then the last company I would look at is Lendlease. Well, actually, it's not the last company. Berkshire Hathaway is the last company. But also look at Lendlease. Now, Lendlease is the sort of company I would not own for the long term. However, the chart is throwing up a possible buying opportunity for that company. So have a look at that possible buying opportunity with Lendlease. The focus of today's video is Lake Resources. I'm going to look at 3 charts. The first chart here is the current yearly chart from April last year to April this year. And the share price has gone from 30 cents to a current share price of $2, reached a high of $2.65, so almost a 10-bagger in the past year for this company. And the chart looks really nice, increasing volume through this time. So even though share price is increasing, there is actually increasing volume. That's actually a good sign. Now, the only negative thing about Lake Resources right now is the valuation, $2.5 billion for a company that is not in production just yet. I think, if I remember correctly, they hope to get in production in about 2 to 3 years. They do have a lithium project in the lithium triangle of Argentina. And I actually do own a company that has a project in that area as well. So I'm hoping some of this hype in Lake Resources rubs off on the share price of that company, and it has over the past month. So really interesting share price action with Lake Resources during March. We saw increasing volume, and the share price more than doubled from 90 cents to a current share price of about $2. So it almost tripled in that month from the low to the high. And we have seen similar share price action over the past 2 years with Lake Resources. So let's go back in time to see those similar situations when the share price of Lake Resources took off in just 1 month. So if we go back to 2020, and this also includes the COVID-19 financial panic, when the share price of this company went as low as about 2.2 cents. In fact, that low of 2.2 cents was reached just prior to the COVID-19 financial panic in December 2019. So there was not a lot of excitement around this company back then. And that makes sense because the hype in lithium, which was around 2017, 2018, really died away during this period. There was no hype in lithium at all. So that is another interesting thing about lithium, whether this hype we're seeing right now can continue. And there are signs it might continue this time around. So I think the hype back in 2017, 2018 was a little bit premature. Anyway, the first bit of hype around Lake Resources that happened in September 2020. And we saw the share price increase from about 3 cents to a high of 9 cents. So again, the share price tripled, just like it did during March 2022 on heightened volume. So this was all in 1 month. And then we saw the share price pull back from 9 cents to about 5 cents. So not quite a decrease in share price of 50%. And then the share price went sideways. So sometimes when you see a large increase in share price in a very short period of time, it's very healthy for the share price to pull back. So those who want to take profits can take profits. But the other really interesting thing and really healthy thing is when you do see that pullback, you need to see a decrease in volume. And we actually did see that. There was a bit of a heightened increase in volume around the time where we did sell, the few days after we did see the share price reach 9 cents. So I think there was a lot of excited people out there. They wanted to take their profits because the share price had tripled. So you will sometimes see a little bit of an increase in volume. But once the share price started to consolidate between about 5.5 cents and 7 cents, that's when we started to see a decrease in volume. So that happened towards the end of October into November. So that could be what we're going to see now over the next month. A little bit heightened volume and then decreasing volume as the share price starts to go sideways. Then the next little bit of hype in this company happened towards the start of 2021, January into February. Share price increased from 8 cents to a high of 46 cents. So instead of being a 3-bagger, this was almost a 6-bagger. Not quite, but just like we saw in 2020 and just like we're seeing now, the share price did pull back. In fact, the share price pulled back from a high of about 47 cents to about 21 cents. So share price more than halved over the next month. But the uptrend was still intact. And during the decrease, as the share price just drifted down during April and May, that's when we did see a vastly decreasing volume. So much lower interest in this company during that period. Then we started to see volume increase during June and July. Not a lot, but it was enough volume to start to see the share price increasing. In fact, the share price increased from 21 cents to 42 cents in a few months, not on high volume. So that wasn't really a hype period in this company because we didn't see the share price increase by a significant amount, say 3 times or 5 times in 1 month. It doubled on increase in volume. And that's the sort of thing you do want to see for a sustained increase in share price over the long term. Now on to Aussie Broadband, and this is a company I do own. I bought Aussie Broadband back in about February or March 2021, and then I sold in August 2021 because the share price rose from about $2.80 all the way to $3.80 fairly quickly. So I thought the share price would pull back. It didn't. It went sideways, which is a really good sign that the uptrend in the share price had not come to an end. Not the uptrend, but the hype in the company had not come to an end. And then we saw another significant increase in share price from $3.80 to a high of about $5.60. And then we saw the pullback. And as the share price started to decrease again or increase again, that's when I took another position. The reason I'm focusing on or looking at Aussie Broadband in this video is on the last trading day of the week, which would have been the 14th of April, the Thursday, the share price reached an all-time high. So that's a really good sign. I like to see companies' share price reach an all-time high. That means there's no resistance moving forward for the share price because no one has bought into Aussie Broadband in the past that is underwater right now. No one has bought into Aussie Broadband at a higher share price. Everyone is in the green, which means there's more than likely not many people who want to sell out of Aussie Broadband unless you start to see some profit takers coming in. Maybe some value investors see not a lot of value with Aussie Broadband and they might take profits, but I'll probably suggest right now there'll be no value investors in Aussie Broadband right now. The other really good thing, as the share price started to turn around after a little dip we had during November, December last year, we started to see increasing volume. In fact, there was two really good big volume days. So that is telling me there was probably some investment or fund managers buying into Aussie Broadband during that period. And we do need fund managers buying in to drive the share price higher, which I think is what happened or what has happened with Aussie Broadband during March of this year. So Aussie Broadband, all-time highs, uptrend in the share price, nice positive sentiment. The business is doing really well. So I think this company has a lot more room to grow from here, and decided to buy back into Aussie Broadband, and I will not trade this company. I'm going to try to hold this company for as long as possible. Ramsey Healthcare is one company I always look at every single week. And the reason I look at Ramsey Healthcare is because I do think it's a good quality company. And I did hold on to, I was a shareholder for this company for a long period of time, from about 2011 or 12 to about 2016, 17, so about 5 years. During that period, the share price was in a nice uptrend. And we also had some really good financial news, financial data from that company during that period. Revenues were increasing, profits were increasing, gross margins were increasing. But over the past 7 years, the share price of Ramsey Healthcare has gone sideways. And this is the weekly chart going back to April 2015. Back in April 2015, the share price of this company was around $65 to $66. The share price of Ramsey Healthcare right now is between about $65 and $66. So again, the share price has gone sideways. During this period, you'll see troughs in the share price and peaks in the share price. In fact, the share price highs have been around about $80 to $82. Those share price peaks have been reached twice, just prior to the COVID-19 financial panic, and then again in April 2016. And the troughs in the share price between about $50 and $54, we have seen those share price ranges reached about 3 times in the past 7 years. The last time was during the COVID-19 financial panic. The share price reached a low of $46. But if you take away those peaks and troughs in the share price of this company is just going sideways. You can see that with the 2 moving averages, which is the 50-week and the 100-week moving average. There's no trend in those moving average, just going sideways. And there is some financial reasons behind this, and I might do a dedicated video on this. So Ramsey Healthcare have seen their revenue grow over the past 7 years. In fact, if I remember correctly, it's almost doubled in the last 7 years. So why is the share price just going sideways? So maybe there was some multiple expansion between about 2010, 2015. So the PE ratio of this company could have been too high 7 years ago, which means the PE ratio could be coming down over the past 7 years. So that could be a reason why we're seeing consolidation period. That has happened in the past with many companies. For instance, Microsoft share price went nowhere for a long period of time because of that multiple contraction after a period of multiple expansion. But there is another reason why Ramsey Healthcare's share price is going sideways. Even though the revenue is growing more than double, profit margins, in fact, I think gross margins have come down. They've decreased from 14% to 11% over the last 7 years. So even though revenues are increasing, gross profit margins are falling, which is putting a strain on the increase in profits and the increase in operating cash flow. If I remember correctly, profits have not gone anywhere over the past few years, and that's all because of gross profit margins. So I'd like to see gross profit margins starting to increase, and that is a little bit of concern because gross profit margins is a sign of pricing power. That is one of the things it does show you is pricing power. So that's probably one of the reasons why Ramsey Healthcare's share price has not really gone anywhere, is because of some of those financial concerns around this business. So I will keep following Ramsey Healthcare. I'll keep on looking at the chart, keep on looking at the financials. And if I start to see gross profit margins increasing on the back of revenue continue to increase, and I see a breakout in the share price from this 7-year period of doing nothing, that could be the time to step on board Ramsey Healthcare again. So you don't have to be always holding a company for the long term, particularly when the share price is doing nothing. You don't have to be holding onto the company. There is an opportunity cost because you're missing out on some companies' share price that are increasing, that are moving up. Now, I do consider Ramsey Healthcare to be a good quality company, maybe not a great quality company. The very fact that gross margins or gross profit margins have decreased over the last 7 years is a concern to me. But when I talk about Lendlease, I probably wouldn't call this a quality company, even a good company, just because of the sector they're in. But just because it's not a good quality company doesn't mean you can not take advantage of short to medium term shifts in sentiment with the company. And it looks like that is possibly what's happening with Lendlease right now. Share price was in a downtrend. So this chart goes back to December 2020, and the share price fell from about $14.60 to a low of $9.80. Nice, well-developed downtrend, but it looks like sentiment has started to shift in the past 2 months. Share price is starting to move up. We're at a 7-month high in the share price right now. Not only that, we have seen increasing volume over the past few months. So there is someone in the investment community who is excited about this company. So even though I'd probably not hold Lendlease for the long term, this is a possible short to medium term buying opportunity just because the share price is at a 7-month high. Share price is moving into an uptrend. Nice positive sentiment behind this company with increasing volume or higher volume as well. So a nice potential buying opportunity right now with Lendlease. The final company I want to talk about in today's video is Berkshire Hathaway. If you don't know who Berkshire Hathaway is, it's not a company based in the Berkshires of Massachusetts. Yes, I actually did work there in the Berkshires of Massachusetts for one summer. This is a company that is run by Warren Buffett and Charlie Munger. Probably one of the best quality companies in the world. And the reason I say best quality companies in the world is because they've shown over the last 40, 50 years, whatever it is, that they have or can provide significant returns for their investors. That's exactly what you want. There are periods of time when Warren Buffett's credentials are questioned, and those are typically during really high growth phases when growth companies are all the rage. But when you look at the chart of Berkshire Hathaway over the past almost 2 years, shares of this company are only going one way, and that is up. But if you look at a lot of tech companies on the NASDAQ, the share prices of those companies have been going only one way over the past few years, and that is down. So these are times when Warren Buffett rises, particularly during high inflation periods. In fact, during the 1970s, he increased his wealth by about tenfold during the high inflation period. And the reason he increased his wealth by such a significant amount, even though if you look at the indexes during the markets during that time, they went nowhere. So even though the markets went nowhere, he significantly increased his wealth during that period because his focus was on buying companies that had pricing power. So these are the periods of time when Berkshire Hathaway and the strategy that Warren Buffett and Charlie Munger use do succeed and will significantly beat the market. And that's one of the reasons why the share price of Berkshire Hathaway is in a well-defined uptrend. I nearly bought stocks. I'm not a shareholder of this company. I nearly bought shares in this company towards the end of 2020 when share price was right on $200. And right now I'm just kicking myself because I thought that was a great opportunity to buy this company at really good, cheap valuations. So the thing I've learned about Berkshire Hathaway and my own investing strategies is don't be hesitant when you see an opportunity to buy a quality company at really good value. That's all I have for this technical update on 5 companies, including Lake Resources, Lendlease, Aussie Broadband, what's the other one? Ramsey Health, and one of my favorite companies in the world, even though I'm not a shareholder, Berkshire Hathaway. I would not be surprised to see Berkshire Hathaway significantly outperform the market over the next 5 years, depending on what happens with inflation. I have no idea what's going to happen with inflation. I listen to a lot of podcasts. Some podcasters think inflation is actually going to increase from here. Some other podcasters believe inflation will fall to 2%. I don't know. I don't think any of those podcasters know. I don't think any experts know what's going to happen to inflation over the next few years. A lot of the experts didn't think inflation would get up to 8.5%, which it is right now in the United States. So it's really hard to forecast the future, particularly when it comes to economic factors, economic indicators. The Reserve Bank of Australia is always wrong with their forecast. The Australian government is always wrong with their forecast. So never look at a forecast and believe it blindly. Doubt everything. Find your own light. If you do have any questions about any company I did feature in today's video, I'd love to hear your thoughts. So leave it in the comment section of this video. Otherwise, I'm not a financial advisor. So if you do need financial advice, make sure you seek out someone who's qualified and can speak to your own financial needs. That's it for this video. Have a good day. Bye.